For the last couple of years, we've obviously been working through a very difficult environment in terms of the commercial real estate sector. I've been in this role now for the Americas for about a year and a half. While our strategy isn't different, we've certainly had to react through these down markets. One of the things that's really benefited CB Richard Ellis has been the diversification of our business. And it's a very different company today than where we were. So that diversification for our firm, both geographically as well as from our lines of business, has really helped us weather the downturn. Our strategy that we set several years ago that we've redefined really is focused on a few key elements of our business. Number one is continuing to focus on our market leadership across the globe in every market, every major market in the world, and across every major line of business that we are in. Secondly, it's been focused on our corporate services business, really growing that sector. And we've seen some very exciting growth not only out of the corporate sector, but also out of the government and public sector and healthcare, or initiatives that we are extremely focused on. Our asset services business globally is also growing and is going global in terms of a real focus for us. So those are the key elements of our strategy. The other pieces of our strategy really have to do with our platform, kind of looking internal and continuing to build our technology, our sustainability, our research platform, and finally building our balance sheet and just recommitting to being a real healthy company. I believe that healthy things grow, and we're committed to being profitable. We've made it through the last 2 or 3 years with the highest margins in the business. Talent for CB Richard Ellis in any commercial real estate company, for that matter, is certainly a huge priority for our company. We say we exist to serve our clients, and we believe that deeply. But the vast majority of our product, if you think about what we do, we sell advice, we sell expertise, and it is a people business. We've had to take a lot of things away over the last 2 or 3 years, and we're recommitting to bringing those things back. Things like training, things like bringing in internships and recruiting back on college campuses. A lot of the tools that our people need to execute their job better. I started in this business in 1984, and I think one of the first things we've got to do when we look back at our industry is recognize clearly that it's a cyclical industry. So learning from the past and studying history, we feel like we've not only seen the movie before, but perhaps we've starred in the movie several times in terms of the ups and the downs in this business. So when I think about getting through the kind of cycles that we've been through, the first thing I would think about is just being nimble, kind of being ahead of the curve and seeing the cycles, because these waves they're just huge. Secondly is to be opportunistic and go with where the market will find new opportunity for you as a firm. So we've look at our outsourcing business as an outgrowth of that strategy. In the last 2 years, we've started a recovery and restructuring services group, really to help financial services firms, banks, special servicers, CMBS world work out of the real estate issues that they've got, all of the distress in the marketplace. In thinking about the road ahead, we are cautiously optimistic about what lays in front of commercial real estate. We're certainly going to be watching jobs and job growth. This economy clearly needs jobs. We lost approximately 8 million jobs in the last 2 years in this economy. So we do believe that it's going to be a slow recovery. It's a 3-4 year recovery. Just do the math on job creation and where we are today. The vacancy rates for most product types are at or near historic highs, but we're positive. We certainly are optimistic. We're seeing occupiers start to commit on space. We're seeing capital redeployed back into our business. The availability of capital certainly has increased. So there's positive signs. I would say late in the fourth quarter of 2009, we started to see pretty significant increases in volume, both in sales and in leasing. When I think about red flags or things that we should be watching, certainly we would first talk about jobs. We would talk about unforeseen events. We would consider interest rates, deflation, those kinds of things that are out there. None of which today are on the horizon in any meaningful way in terms of our view of things that will slow us down.